All right, today we're putting on our detective hats. We're investigating a really fascinating case. What happens when a stock's price suddenly, and I mean suddenly, goes parabolic? Our case study? A company called BNAI. Let's dive right into the evidence.
So, check this out. This is where our story really kicks off. On October 1st, BNI is just ticking along, a little under 22 million shares traded. Pretty normal. Fast forward just 2 days, and bam, over 208 million shares change hands. That's not just a jump, that's a full-blown explosion. We're talking nearly 10 times the activity in 48 hours. Something big was clearly going down.
And with that kind of trading frenzy, you know the price is gonna move. The stock rocketed from just 35 cents the day before to a peak of over 60 cents. Now, a surge like that gets everybody's attention, for sure, but it also makes you ask a really critical question. Is this the real deal, the start of a massive new upward trend? Or is this just a classic case of a stock flying way too close to the sun, about to come crashing back down to earth? That's what we're here to figure out by digging into the clues hidden in the data. Okay, so first things first, we have to start with that absolutely massive trading volume. I mean, it's the elephant in the room, right? Volume tells you about conviction. Is this just a bunch of noise, or is there some serious money getting behind this move? So how do we track that? Well, there's a neat tool for that called on-balance volume, or OBV for short. The best way to think of it is as a running tally that basically tells you if the big money is flowing into the stock on days the price goes up, or flowing out when it goes down. It's our way of trying to follow the smart money. And here's our first big piece of evidence from the lab. BNA's OBV is positive. What that tells us is that this huge price jump isn't just some random fluke. It's being fueled by some serious, sustained buying pressure. So, clue number one, it's pointing straight to the bull camp. But, it's never that simple, is it? This is where the plot really thickens. Our second clue, well, it throws a huge wrench in the works, because we've got data telling us two completely opposite stories at the exact same time. And this right here really lays out the battleground. On one side, you've got the bulls. A whole suite of momentum indicators are just screaming, go, go, go. The trend is strong, everything looks positive. But then you look at the other side, and we're seeing these bright red warning signs flashing, saying the stock is extremely overbought. This is what a market tug-of-war looks like in the data. So let's talk about that term, overbought. What does it actually mean? The best analogy is like redlining your car's engine. Yeah, you're going super fast, you've got a ton of power, but that needle is deep in the red. You just can't keep that up for long before something has to give. It's a signal that a stock has just gone up way too far, way too fast, and a pullback might be just around the corner. So just how far into the red are we talking? Well, we can look at the RSI, the Relative Strength Index. Anything over 70 is usually considered overbought. BNI, it's sitting at almost 90. That's not just a little hot, that's a 5-alarm fire drill. The data is practically yelling at us that conditions here are extreme. Okay, so we're kind of stuck, right? We've got intense buying pressure on one side and these screaming overheating signals on the other. To try and break this tie, we need our third clue. It's time to zoom out. Let's forget the day-to-day noise and look at the bigger picture. Is this crazy surge actually changing the stock's long-term story? And these moving averages really help paint that picture. I mean, look at this. The current price of 60 cents has just completely demolished its recent averages, like the 5-day and the 50-day. But what's even more telling is that it blew right past its long-term 200-day average. That signals a major, major break from its recent history. But, and there's always a but, isn't there? Here's a little reality check. When we step back even further and run a long-term analysis on the stock's entire history, the data still shows a slight downward trend. So even with this insane, incredible spike, the bigger historical picture has actually been a negative one. And that brings us right back to the central mystery of this whole case, doesn't it? Is what we're seeing the start of a true turnaround, a fundamental shift for this stock? Or is it just a wild, spectacular, but ultimately temporary deviation from its historical path? All right, it's crunch time. Let's take all the evidence we've gathered, the huge buying volume, those conflicting signals, the long-term context, and try to piece it all together to decode what could happen next. Now, to really get a handle on what might be next, you have to know the key levels everyone is watching. Think of it like a floor and a ceiling. That 60-cent mark, that's the ceiling, the resistance that the stock needs to punch through to keep going up. If it starts to fall, the first potential floor, or support, is around the 50-cent mark. And below that, a stronger floor might be found back at 35 cents, where buyers could decide to jump back in. So, when you put all this evidence together, it really boils down to 3 likely scenarios. First, the bullish breakout. Momentum wins the day, the stock smashes through that 60-cent ceiling and keeps climbing. Second, the bearish pullback. Those overbought warnings were right on the money and the price cools off, heading back down toward that 50-cent floor. And third, we could see sideways consolidation, where the stock just kind of treads water for a bit while the market figures out who's going to win this fight.
So after all that, what's the final call from the automated analysis? It's a hold, but, and this is the key part, with low confidence. And that makes total sense, right? It's the system's way of saying, hey, the data here is a complete mess. You have incredibly powerful arguments for both sides, and it's just impossible to make a high conviction call right now.
In the end, BNI is at this incredible crossroads. You've got the unstoppable force of massive buying momentum crashing right into the immovable object of extreme overbought warnings. The next move is going to be a true test that reveals which of these powerful forces is stronger. So now that you've seen all the clues, what does your analysis tell you?